Good morning everyone. I am Dr. A. Nagalakshmi, Assistant Professor, Department of Commerce with Finance in Dr. SNS Rajalakshmi College of Arts and Science, Coimbatore. I am here to explain a concept, fund flow analysis. Fund flow analysis is also a financial tool used to analyze the movement of funds within a business. It focuses on the sources and uses of funds during a specific period. The primary objective of fund flow analysis is to understand how funds are generated and utilized in a business, which helps in assessing liquidity, financial stability, and operational efficiency. Key concepts of fund flow analysis. First one is fund. In the context of fund flow, that is in the context of fund flow analysis, funds typically refers to the working capital, which is the difference between current assets and current liabilities. However, it can also refer to cash equivalent and other liquid assets in some cases. Next is the sources of funds. The sources of funds means there is an internal source and external source. Internal source, it includes net profit, depreciation and reduction in working capital. External sources includes long-term borrowings, new capital investment, sale of fixed assets and other forms of financing. Next, uses of funds. Internal users and external users are there. These include an increase in working capital, that is like an increase in inventories or receivables, payment for the expansion and other operational uses. Next is the external uses. These includes repayment of loans, dividends paid or investment in long-term assets. Next is working capital. So what is working capital? The key focus on fund flow analysis is on changes in working capital over a period. If working capital increases, it indicates that more funds are tied up in the business, while a decrease indicates the funds are being released. Now we are going to see what are the objectives of fund flow analysis. To assess the financial position of a company by analyzing changes in working capital. This is the first objective. The second objective is to identify the sources from which funds are generated and how were used during a given period. Next is to evaluate company's ability. Company's ability to generate funds and its liquidity position. Next is to provide insights into how efficiently a company manages its working capital. Next is the key statement in fund flow analysis. What are the key statements? Fund flow statement. So a fund flow statement is a detailed statement that shows the changes in the financial position of a company between 2 points in time, typically showing the sources and uses of funds. The sources of funds. So these are the activities or events that result in an inflow of fund. Common sources are issue of new shares or debentures, long-term borrowings, sale of fixed assets, depreciation. Uses of fund. So how the funds are used? These are the activities or events that led to the outflow of fund. That is commonly what are those includes means payment of dividends, repayment of long-term debts, purchase of fixed assets, increase in working capital. A fund flow statement typically shows net changes in working capital, sources and uses of funds, the movement of funds during the period. Next is the working capital changes. Increase or decrease in working capital are important indicators of the company's operational changes. A reduction in working capital may indicate better efficiency or a temporary release of funds, while an increase may suggest increased investment in short-term assets. Next, we are going to see the types of fund flow. There is a positive fund flow and a negative fund flow. When the company generates more funds than it uses, resulting in an increase in working capital, it is positive fund flow. When a company uses more funds than it generates, resulting in a decrease in working capital, it is said to be what? It is said to be negative fund flow statement. So now we are going to make the conclusion of this. That is, we are going to conclude fund flow analysis is a vital, that is important tool for managers, investors and stakeholders to understand the movement of funds within a company and evaluates its financial health. It helps to identify where funds are coming from and how they are being used, thus providing valuable insight into the company's financial performance and operational efficiency. Thank you. Thank you so much for the patience listening.